Volume is one of the misunderstood concepts in small cap price action analysis. You can hear it used a lot in all kinds of ways, but at the end of the day, nobody could actually tell you what volume means what to your trading or to this runner or to your setup. Because the truth is that number one, volume is a proxy for participation and liquidity, not for direction, and also that it's just one part of the puzzle. So if you want to know what's actually going on in a stock from a volume perspective and what it might mean for the chances of this stock to keep going or to fade or whatever, then what you need to do is you need to equalize volume across runners and add a second layer that you can cross-reference it with. So what do I mean by that? The way that you equalize volume across all runners is obviously through dollar value. So yeah, sure, track volume and get to know what volume does, but also keep top of mind the actual amounts of dollars traded per runner, because that is the actual value of volume. So you could see stuff trading millions of shares, lots of millions of shares, but when you turn it into dollars, that's when it all gets equalized. That's when you can see something like this, for example. This is a snapshot of what small caps did in this past week, and you can see that it's sorted by dollar volume. Each day is sorted by dollar volume. And we don't need to look at how many volume traded and what the price of the stock was to try and figure out if this was a lot of volume or a little bit of volume. Here you go. You could see it through dollar value, and it equalizes the value of the volume across all of them. Now, the second piece of the puzzle is float rotation. Float rotation tells you how many times the float flipped. So, for example, if Allure at the time of that run was 7 million shares, they since then diluted, I think they're 12 million shares, which was, I think, the point of that run. But back then, they were at a float of 7 million and the float rotated 20 times. That means that the volume on that day was 140 million, right? So at the time, it was a 7 million float. It traded 140 million shares, so it rotated the float 20 times. So, okay, now we've defined the two variables through which we look at volume. It's through dollar value and through float rotation. Now let's talk about why and what to do with that information. What does it tell us? So the idea is pretty simple. The higher the dollar value of a runner is, the more participation there is in the stock, the more it could go to bigger and bigger runs. And the same thing is true with the float rotation, because the more times the entire float of a stock trades in a single day, the more that stock becomes just a trading vehicle and it detaches from anything fundamental, which means that the more times the float rotates, the more this runner can go crazy. So, okay, so we've defined the baseline is the higher the dollar volume, the more the thing can run. The higher the float rotation, the more the thing can run. So where the magic of the analysis happens is in the different combinations of those two variables. So if you have, for example, something that traded a lot of dollar volume, but is trading a low float rotation, then that is actually what we call in small caps trading thick, because there's a lot of participation in there, but it's not actually rotating the float a lot, because presumably in this scenario, the float would be very big. And so that's a scenario that as a long, you could be like, not maybe this one doesn't go crazy. Maybe I'm not going to put all my eggs in this basket. And as a short, you could look at that and be like, okay, this is sort of my prime target. It's something that has a lot of dollar volume. So that means you could, for all you big traders out there, you could put a lot of size on that, but it might not run very far or go crazy because it needs to flip the float a lot to go crazy usually. And it's just, there's only so much dollar volume that can go into a stock, right? So a high dollar volume and a low float rotation is something that's good for shorts, not so great for longs. Now, going over some of the other combinations of these two variables, low dollar volume and high float rotation means the stock is very thin, and low dollar volume, low float rotation is just, there's not a lot of information there to glean from that. Now, the way small cap runners usually work is that you're going to have sort of three baskets to look at every day, hopefully every day. You're going to have the really major high dollar volume. These are the main runners of the day. About 100 million or more is going to fall into that category depending on the cycle. But generally speaking, 100 million or more is where the real activity lies. The second tier is sort of the mid tier, the 50 million, give or take. Those had some participation, but it wasn't crazy. And then under that, you have a lot of the sort of the 20 million, the 10 million, the 5 million. Those are the pop and drops. Well, usually pop and drops. And the way to look at that, just from the dollar volume perspective, before we go back again and connect the float rotation piece to it, is that the low dollar volume ones, by and large, they tend to be pop and drops. And so as a long, you don't care about them. As a short, you sort of take those as the, I don't really need a setup here because a setup is not going to form. And I'm just going to sort of be front side on this and hope for a pop and drop. You'll mostly see those happen in 2 times of the day. Earlier mid pre-market, where they'll just pop and there won't be any follow through and they'll just fade, and everybody will look at that as like, the easy fader, or on the long side, like the thing that bagged the shit out of you. Or it'll be in the regular trading hours where out of the blue, it'll start running, but then no follow through at all. The mid tier, the 50 million plus minus, they do build some structure, some pattern, but because there isn't tons of participation, they don't tend to go very far. Sort of the median run for the sub $100 million volume is in the 65%, like that's where high a day is more around the 65%, maybe 70, whereas the over 100 million, their median run is higher than that. And the high dollar volume, we already spoke about that. Now, earlier I spoke about connecting the dollar volume to the float rotation and the really major dollar volume runners. And I think that part is more obvious, but you still have to do that to the mid tier and the low tier. And different conclusions arise depending on which tier you're looking at. What I mean by that is that if we're looking at the low dollar volume, well, quite honestly, the float rotation doesn't matter as much because there just isn't a lot of participation. That being said, you should still apply the float rotation prism to it, which is to say that the higher the float, the harder it'll be for this stock to run, or vice versa. The lower the float, the easier it will be for this to run. But if it's just not developing into anything beyond a few $1 million in dollar volume, then regardless of the float rotation, you have to look at this as a pop and drop potentially. And that's sort of natural because without a lot of participation, you don't have a lot of analytical resources at your disposal there. There's not a lot of data points to analyze. And when it comes to the mid tier, you do start to get a little bit more data points. So the $50 million, right? The sub $100 million volume, but over 20 million. So in the 50 million area. Over there, you look at the float rotation and you say to yourself, okay, I'm in a mid tier. There's participation here, but nothing crazy. So the same float rotation rules apply where the bigger the float, the less you sort of expect this to go crazy. The lower the float, the more you say to yourself, okay, this could go crazy if it wanted to. And so that's the primer on how to equalize volume and add another layer to it, the float rotation, to help you look at all runners in the same way. So you're no longer looking at the volume and feeling like you need to be some sort of a mad scientist that has to somehow use the actual absolute volume bars to decipher what's happening or what will happen from here. Now, I want to go back to this picture that I had up in the beginning of the video, and I want to explain what this picture is and how it connects to this subject. So on the right side, we have the dollar volume, right? Here's stocks that trade at $10 million or less. Here's 100 million. Here's a billion. Here's 10 billion. And on the left is how much they ran in a single day. Here's 100%, here's 1,000%, here's 10,000%. And if we look at the extremes, the ones that did the most amount of dollar volume and the ones that ran the most amount of percentage, we're going to see some names that you should know if you've been a student of this for the last couple of years. Each one of them went on a massive multi-day run, so they each had a few days where the dollar volume was absolutely huge. But you could see that the amount that they ran percentage-wise is actually not crazy, right? It's in the 100%. This is a logarithmic scale. I don't really know how to figure out how much percent this is, but it's in the 100% or 200% area or whatever it is. They ran a lot, but their dollar volume was absolutely astronomical. Some of the highest dollar volumes that we have seen in small caps in the last year or 2 years. And over here, we have guys that both did a lot of dollar volume, right? In the hundreds of millions, in the billion, or even in the several billions, but they ran like crazy. They ran 1,000%, 2,000%. And that's going to be OCTO, which is now ORBS, which was one of the biggest black swans of 2025. It was a crypto treasury play when crypto treasury plays were at their hottest. CWD, same thing. And you're also going to see some of the most egregious China names in recent memory, TCGL, QMMM, etc. Now, what's the difference between these guys here that ran on high dollar volume and went to 10,000% or whatever, and these guys here that ran on the biggest dollar volume but did only 100% or 200%? The difference between them is the float. Beyond open, these guys had gargantuan floats. And so when the huge dollar volume came into these stocks, yeah, they ran a lot, but a lot compared to their float. So they ran a lot, but not out of this world. However, when Octo, which was back then like a 2 million share float, got billions and billions of dollars in dollar volume on a single day, or CWD, same thing, was a 1 million or 2 million float, got $1 billion or $2 billion volume in it in a single day, they ran to the moon. And so it's that difference there that you need to understand that sort of dictates the way you look at the relationship between dollar volume and float rotation. So you have to know the brackets of the dollar volume. You know that the sub 20 million is just pop and drops. Between 20 to 100, they're like sort of, the mid plays of the day. And over 100 million, and particularly over a couple 100 million, that's when you know you're in the real major plays of the day. And you constantly cross-reference it with the float rotation. And looking at those two things gives you a clue as to potentially how far this thing can run, or maybe the opposite, right? That you don't think that it will be able to run very far. Now, again, everything is cycle dependent and you have to remember that. But let's look at some recent random examples. I'm recording this on a Saturday. ONMD ran on Friday, yesterday. It closed at 70 cents the day before, which means that it has the 15-cent hold bands. And it traded over 200 million shares, which seems like a lot, right? Now, let's apply the dollar volume and float rotation prism to it and add a couple of other variables, because no one trick is ever going to help you in trading. You have to look at a lot of things together, right? But today we are focusing on the volume part. So ONMD is a 20 million floater, which is a pretty decent size float as far as pennies go. It's not huge. It's definitely not small. It's bigger than your normal penny stock runner, but ultimately throughout this day, it flipped the float 11 times. 11 times is respectable, but it's not crazy. If you go back to the list we looked at earlier of the runners each day, you're going to see that similarly to how dollar volume has 3 tiers to it, float rotation also has 3 tiers to it. There's the sub 10 time float rotation. There's the 10 times to around 20, 25-ish, I want to say. And then there's all the stuff that's over 25 times the float in a single day. So stuff that's rotating the float less than 10 is on the small side for runners. And ONMD rotated the float 11 times. So what we have here is a high dollar volume because it did 260 million. It was the second largest runner of the day dollar volume wise. It did $260 million, but it rotated the float just a medium amount of times, 11 times. And so if we go back to how we spoke about looking at things, we have a high dollar volume, but a medium float rotation. Not necessarily a small float rotation, because if the rotation was under 10, then it would really be not a good look for the longs and a really good look for the shorts. But it rotated 11 times, so it's medium. So what that's telling us is that this thing is trading a bit thick. Now, if you add to that the fact that this was a sub 70 cent close and it has the 15-cent halt bands, and you come and you take a look at the stock and you say, okay, the float on it is a bit on the higher side for the price that it is. The float itself is not rotating too many times. It's a tight halt bander, but it's not threatening halts at any point. Plus, it's trading $260 million, or it's trading a lot of millions of dollars, depending on what time of day you're looking at it, right? 260 million was by the end of the day. But all of those signals should tell you, okay, this thing is thick. And so if you're a long, maybe you don't really want to play this as a day trade. If there's a reason to play it long as a swing trade, that's fine. But from a day trading perspective, if you're a long, this is not the instrument that you're looking for. And conversely, on the short side, if you're the kind of short seller that I am, which I don't like to be a hero on the thin stuff, I'm not crazy about trading the thin stuff, then this might be a good situation for you because it doesn't have a high chance of going crazy. You had your volume exhaustion over here, clear as day, right into here. And the rest of the day just kind of gave you a lower high area. Yeah, I didn't want to give up the lower high, so it stayed in a tight range, but that's still a very comfortable trade for a short. You have the lower high right here, and then you have the couple times that it tried over it, and you can see that the volume popped off at those areas, so it was sort of like telling you exhaustion. But it never went too far to begin with, so the range was a bit on the tight side generally. Look, it ran 100%. That's nothing to scoff at, but this is a thick trader, and this is how you can use dollar volume and float rotation to see that. Let's take a look at another thick trader, and then let's look at some thin traders. So let's take a look at XWEL on the daily chart. It's been running. XWEL is a 5 million floater, which, by the way, coming from a penny stock, which is where it was, makes it a very small float. Because 5 million float for a penny is small. And so because of that, when a lot of volume was introduced to it, on this day it had 350 million shares traded, which at a VWAP of slightly over $1 or whatever it was, came out to $420 million in dollar volume traded. So it was a small float that had a lot of dollar volume in it on its day one, and the float rotation was very high. It was 70. So it rotated the float 70 times. Now we're in a week cycle, so it didn't run a lot. It ran from 35 cents to $1.55, which is 320%. And it was one of the highest, if not the highest percent runner of the week, exactly because you got a low float with a lot of float rotation. And so this is actually the definition of thin, and it was thin on day one, but it kept going. And so on Friday, on this day over here, it became thick. Why do I say it became thick? Because on Friday, it kept going to higher prices. So it came from 35 cents, and now it's at the low to mid $2, but it was doing it on lower volume. So on this day, it flipped the float only 13 times. There was $125 million traded on that day, and it flipped the float 13 times. Now that still caused it to go higher, but at this point it was trading thick. Now there is sort of a fundamental aspect to all of this that you should know, which is that after this run happened, they put out a PR that they're going to complete dilution on this day, and on this day they didn't complete the dilution, so shorts were getting squeezed. Some longs were smart enough to long into that. But the problem is that at the end of the day, it traded very thick because the dollar volume was decent, but not crazy. The float rotation was low. The float rotation wasn't high. It was already on a multi-day run. So you ended up getting the same action here as we saw earlier on ONMD, except because this is already on a multi-day run, then there's much more range there between the low of 35 cents and the high of $2. So instead of being stuck in a range all day and eventually giving you a bit of a fade like ONMD did, this one did not spend a lot of time in the consolidation. It started dropping and dropping. So that in a nutshell is how to look at volume in an actual helpful way. Dollar volume equalizes all the volume for you so that you know how much participation there actually is in the stock, but it doesn't tell you much about the potential just yet. Cross-reference it with the float rotation, and that tells you how thick or thin the stock can be, and that does give you probabilities whether this thing can run or not run a lot. And separately from that, remember that the low dollar volumes don't really develop much of a structure. So while it's good to be aware of the float rotation for those as well, those you primarily just simply look at as pop and drops for the most part. I hope that was helpful. We got a little Discord room. You can come join and talk about that stuff if you want to. I'll see you in the next one.